Good afternoon, traders. Welcome to TradeSetup and the live stream for the 16th of March. I hope we're all doing well today. The market's not going too bad. I expected it to be a bit stronger, but we've got, I don't know if anyone saw those numbers, employment numbers that came out at 11:30 weren't too strong at all. So capped things a bit, I think, on the upside, but the US has powered along last night. We'll take a look at that in a minute and just take a look at the ASX. Just to kick it off, for anyone that's new, please just what's on the screen there. You can see the Twitter, Facebook, and YouTube. If you'd like to join us in on any one of those, if you join us or subscribe to us on YouTube, you'll get every time we go live, you'll get I think you get an alert straight up, which actually alerts you to that we're starting to stream. So feel free to subscribe to us there, or just keep an eye on us at Twitter. And Facebook, we start posting, and we're starting to get a bit more active too down the track. So we'll see how we go. Also, just any for the newies, just general advice warning there. We don't give specific advice. So what we chat about is just our own opinions and opinions of others too, I guess. So all good. Good afternoon, Nandor. How you going? Are you having a good day? All right, let's get into it. Let's take a look at the ASX. Let me just go change over the vid. You'll see something else come up in a second. There you go. Now let's just minimize that. All right, you can see the markets. I thought it'd be a bit stronger. It's opened up. Oh, it opened up positive, and I don't know if anyone noticed this morning they had a rollover on the future, so it was a delayed open. I think it's delayed by 10 or 15 minutes or so. Yeah, but a slower than normal open, which I think a lot of people didn't expect to forget about. I actually forgot about it until I was watching the open. It's always the third Thursday of the contract month, so that's every quarter. March, June, Sep, Dec. So just be wary of those when it's opening at that stage. Yeah, so overnight, they had the rate rise in the US, which was widely expected, but I think what traders took as positive and what they weren't quite expecting was the pace of the future rate rises. I think Yellen pretty much was talking about everything's going to plan, really. They're pretty happy with it. They're not going to they're not going to increase the pace of rate rise or monetary tightening. So people have taken that as a good positive, and the US dollars copped a bit of a battering last night, and that's helped out all the other currencies linked to it and the commodity prices. So that was good. But yeah, the US, even though some of the valuations I think are a bit overextended at the moment, prices in the US did kick on strong. They took that as a bit of a positive going forward. So it'll be interesting to see how we go going forward. But yeah, definitely I think they're still looking at 2 rate rises for 2017. So they're looking at 3 originally, so a couple more really. So really we'll be looking towards when the next rate rise is going to be and how that's going to affect the US markets and in turn affect us. Yeah, so in saying that, I expected the market to open up about 30-35 points going from the futures and where the actual market closed overnight, but it was a bit capped, and that's because of the, really in hindsight, it was because of the employment data. Now, I'll have to just quickly grab something up to see what the actual figures were. It wasn't good. I don't know if anyone caught that data come out. So it was at 11:30, employment change. They were expecting up 16.3 thousand new jobs. It got down 6.4 thousand. So the actual unemployment rate jumped. They expected it steady at 5.7%. It jumped to 5.9. So yeah, not so good, and that's not so good considering pretty much the rest of the markets are doing well. I guess Europe is not. They've still got a few issues with Brexit and the timing of the Brexit and how they're going to exit and all that sort of stuff. So there's still. That's capping the UK a bit and the pound a bit. But yeah, and those numbers weren't too good for our market. And you can see the markets, we've got WBC, that's pulled back from the highs at 35.25 thereabouts. It's still hovering up there. The trend is still high, still looking good. The key anchor is just below 33.50. Got a lot of room to move back really, but let me just get rid of that. And you'll hear my phone go in a second too. So yeah, it's I think that unemployment data has just shook up the market. Didn't quite expect it to be like that. I guess in one respect, we're not going to be looking at rate rises down the track too soon with those sorts of figures. So see how it all goes. What do we got? What's our markets? We've got AGM, which is, we're in at about 18, I think, around there, and it's just backed off. It's holding up above that 15.5 zone, but who knows? It's been holding here for a couple of days around 15.5, 16, 6 to 17. Expect that to kick on. API going great. Expect it up to, I want to see it push up through 210. So this is another little alert we got. We got in somewhere around 195, 6, 7. Can't quite remember now, to be honest, but it's somewhere down here, just on that push up through this inside high there. Oh, sorry, inside lower high. So that's just a good little entry. If anyone's watching, you can see that's like a double bottom. All right, I know that the market's pushed down. It's pushed down to 185. It's popped back up, made a lower high, retested, even washed it out by a cent or so, which is good. You know, if you get that sort of retest fail, we say, and then the market starts pressing up off there, even though you made a lower high at this point, when you pull back and you're starting to make a higher low, that's your little shoulder trade that we've talked about before. And with a breakout through that 195, so probably 196 zone, you know, that's just a good inside continuation pattern inside of this move down. So you're expecting that, you know, higher low to hold, and then we're going to start put pressure on this, you know, 175 and so on. So I expect that to push up through at least to 210 and above. We'll see how it goes. What else we got? This is, someone brought to my attention, I think we talked about this BWX in the stream recently. It does look good. I just want to see sort of push up through, as I think it's 463. Just kick up through here, and then, you know, then I want to see something like this. If you can see that price action there, it's held that high low, so it's similar. So it's had a couple of goes, you know, that low, that pressing down, and it's built a little high low, and it started, you can see that buyers were stepping in at slightly higher prices, and then you started getting a bit of a wash out of those lower highs just in here, and then it led to a nice little rally anyway. It's pushed it up to just above 5, and we had a good correction lower, but really it's about 425 thereabouts. It's sort of the most, it's really the key level on that pullback here. A bit of a wash out of that level, and then it popped up. Probably news on that about that point. Then of course, every time you get that sort of extension, just expect a bit of contraction lower. You can still hold the trend, but you can get caught if you're going to buy it up here. I mean, you could miss a trade if you don't. Yeah, that's on, to be honest, but you don't want to be jumping in and when price is starting to look a bit extended. So we've got that contraction low, and then we're starting to potentially holding, like if we get that pop up through 463, then that sort of confirms, without pushing down below 445 or these lows here, sort of confirms that inside some really a higher low on a minor scale, but it is confirmation that buyers are starting to jump in, so that's looking good. CCL's done bugger all lately, to be honest. I think we'll see if that can pop up. I don't really want to see it go through that this little minor low here at 1027. If it does that, we'll probably just look to exit. It's struggling just to, you know, it's a double top essentially with a, you know, probably a 1 cent wash out of these recent highs. Trend is still high, still looks good. The weekly is the one that I like. It's starting to press up, but I want to see it. I want to see it at least test 11. I'm just hoping it can do that without rolling over first, but we'll see how it goes. CKF wasn't good on the open this morning. Bit of a shock. Didn't like that. Open lower. It's pressing up at the moment. We're in positive territory, so only by a few cents, but we'll see how that goes. GXL, one that's probably going to trade soon. No, 722 we got. I want to see. I don't mind it getting through this little high here. You know, was it 705 thereabouts? If you can get up through there, that's sort of, you can see that you know, stochastics are starting to roll up. It's looking good that that's going to be a high low. So you can sort of front run. So we talk about front running these levels, but then just remembering that on a weekly basis, it's got to really break through that 722 for me to be you know, inclined to look at buying. I'd rather see it pop up, pull back, build the high low, and then go. We'll see how that goes. Trying to see anything else we got. It's looking good. MVF. That was a bit of a bugger. Now we're going to talk about this in a minute. I'll had a question by somebody about sometimes, you know, the alerts are triggered and they pull back after triggering, after jumping in. So is it worth just waiting to get holding off just to get a better price? You know, fair question. I think we've all done that before, and we've all thought about that before when they start pulling back. But sometimes it's just a function of the market. And so you don't want to get caught up changing your trading in that respect, because I we'll talk about it more. Just remind me, but I'm just going to go into some currencies first, and then we'll jump into this. Just describe, talking about that type of, if you start changing your strategies and things like that, and why I think it's important. If you've got your setups, you stick with them. There's times when it's not going to work. There's times when it is. But why you don't want to change it anyway. Now let's just get into. That's probably about it for what we've got really. MVP. I like this one, but we don't have it as an alert at the moment. That's they're doing very well, and it's looking like it's potentially a bit of a flush down to 460. Hopefully it's going to hold a higher low here, break up through that sort of 530 zone, and then I think it could be off. Don't forget that weekly structure, and it's contracted low. We've had that push up. If we hold this higher low, or as a higher low, it's looking great. See how it goes. SAS is one we had in the past. Oh, we missed that run up to 28, and it's just pretty much collapsed, which you'd expect. It's popping up today, but that could just be, and we could just spike down and make it could be just a higher low we build, but we'll see how that goes. It's nothing set up in the daily at least anyway. But they're having good news. I think that's really it's kicking along, that good news flow. It's in the back of people's minds. They're happy to jump in. See how it plays out. Let's just get over the currency. Just want to show you a couple of... Hey, Paul, how are you? BSL, let's take a look. That's good. You love that one, don't you? And why wouldn't you? That was actually, I remember when you mentioned that, I was looking at this, as a continuation pattern, it's great. The only problem you can see, for me, if you're a new entry, you got to keep it tight. I'd think you'd be keeping around at 12.20 or just a touch below 12 on the exit, because if it retreats back below there, then I think this is potentially just flushing out those highs, but it looks good. And if you go down to the weekly, it's up quite strong. That's the only thing that gets me on a, it's a good move up pretty much since mid-2015. It hasn't stopped, so it's an extended move higher. Could be obviously some good fundamentals, but either way, fundamentals or not, there's always going to be profit taken eventually. It's just when. If you're holding it, I think you've got a couple of positions out, long term and short term. Yeah, that's great. When you do get it right, you want to squeeze out as much as you can. That's pretty much the name of the game. I mean, I guess that goes for everyone. If it's part of trading. To be honest, I think it's not rocket science as such. Trading, once you learn some bits and pieces, and then you put it together and you pick a style like we've discussed in the past. You pick a style that suits yourself, suits your makeup and suits your trading style. Well, pick a style that suits yourself. It comes down to psychology, I think, is when it suits you, and also suits your time frames and what the time you've got to spend on trading. Once you've got that down pat, you've got something that you like doing, and then you just rinse and repeat. You don't try to change it. You don't alter it. Once it's finding your edge, and once you've picked your edge and it works for you, then you just do the same thing over and over again. And I think by doing that, a lot of people, it's not rocket science to get 50-50 at least. So the key then, I'll look at that in a second there, Paul, CBA. The key then is just to really, if you can get 50-50, I mean, that's sounds stupid, but you want to get better than that. But if you can get 50-50, then it's 2-1. That's all you're looking for, and that means you're profitable. And so from there, you're just working on refining your edge, picking up a few extra skills along the way, and letting your profits run when you see something that's running in your favour, not cutting it off short, which to be honest, I've had a problem with in the past. And then just learning a bit better and refining that and letting things run a bit better. That's where you can, you can get your stats up a bit. You can get 4-1, 5-1, and they're the ones that really kick on. And just beautiful. You can get more than that on some of the stocks we got. I can't think offhand, but they've been a lot more than 5-1. But I guess what I'm trying to say is just don't be so concerned when you get it wrong. You're looking for the same setups, just rinse and repeat. See how it goes. Now, CBA, what I'll do, I'll take a look at the FX, then we'll come back and I'll just touch on a couple of things I wanted to before we start looking at some stocks a bit more in depth. I just want to show why, here's the ASX, I mean, we don't need it. after last night, we know that market's heading higher. We're pulling back today, but it doesn't mean too much. You've got to remember the figures, weren't so great, but what does it actually mean? It just means that if we're not going to raise rates, obviously that's what it's pointed to do. If we're not, there's no reason to raise rates. We're potentially, I don't know really, to be honest, if we're going to cut rates again, but I think they should be steady. If we have to cut rates, then so be it. It's probably going to free up a bit of cash. It makes borrowing a bit cheaper. And I think it's going to be probably good for the equity market. And you can see this market starting to lift up. We're holding a higher low at 57.68. If we can build another higher low here and push up into the close, and then tonight a bit of positivity that can take us through 58.27 and above that. We'll just see how it goes. So I think it's still, it's looking good. You can see that sort of that's holding higher lows. It's nice and strong. Great price structure. You had that acceleration high. I think we're going to potentially another accelerated move. Or hopefully it can take us through 58.27 up to, this is a good base that's been built to take us up towards that 6,000 mark. We've been spruiking this for a while, so hopefully it proves me right. It continues to prove me right. We'll see how we go. Now we've got a couple of things. Aussie yen was an alert we sent out yesterday. I don't know if you've got the ability to trade the FX, but we're going to do a bit more on that because there's opportunity in the FX markets. There's definitely opportunity, and we've been trading it for a while personally, both Devon and myself, and we've been refining probably over the last year or so as well. While we're focusing on more on stocks, but just refining on what we're looking at, and I think there's some really good opportunities because you can scale it. When you're doing especially on your CFDs, but if you're doing pure FX, you can do 10,000, 20,000, 100,000. Couple of thousand if you're up to $1 million in FX, so you can sort of pick and choose your exposure, and it's a nice little leverage on it as well. So we're going to be getting into it a bit more. And what we just saw on this one, you can see from a longer term perspective, you can see that market's sort of edging higher. It's sort of consolidated through there, held support, and then busted out and took out those most recent highs, and then it's contracted in. But you can see that was a nice little. It was around that 85, 88 mark. It's a really nice little support zone. Then it tends to contract in, but hold a firm support zone. And then we can see it's popped back up. And when it was just backing off from this resistance, you can see we've just drawn a line in there. We're looking for it to break out of contraction because we know that there's been some shorts built up on that. Again, it's our secret little secret analysis tool. But anyway, we know that that's been built up. And you can just see it from the charts. And when you got this initial break up and just this little move here, I know it's only mildly, but that sometimes is a precursor. It doesn't go up, it doesn't just go bang straight up, straight through resistance and off she goes. A lot of the times they break up and they start showing you some signs that's coming out of contraction. So all we were looking for as of yesterday was when about this stage here, we can see it sort of contracting low, and just this little washout too of these lows just through here. And then that higher low built, and okay, we know that they're short. We potentially going to look at a short squeeze here, and that's what's played out. Obviously, the Aussie dollars rallied. This is the Aussie yen, by the way. If I didn't mention that before, Aussie dollars rallied, especially on the back of the rate announcement too. So that's just popped up and it's just kicked it on, pushed it up through 87.08. So that once you get that break up through that zone, that's confirming this is a major high low, and we're breaking out of this contraction, and we're going to start edging our way higher, potentially to 88.15. So we're just going to keep an eye on that. We're just retesting that breakout zone at 87.08 at the moment. So there is some really good potential just to squeeze out some of those shorts that have been building up, potentially here, in here, and again around this sort of zone here. People are expecting it to roll over and break through that 85, 88 mark, which is fair enough. But we just want to see that it's got to spend some time. Once it builds up those shorts and we're happy, then that's enough fuel for a move higher, just to start flushing them all out. And you're probably going to get people shorting it up here like they do. But anyway, that's looking great, guns. We'll see if that can keep going. That pound trade, we sent an alert yesterday. I didn't like the way it moved up here. Well, it's collapsed through that support zone at 121.40. So when we were looking at it, there's potentially for this, we were expecting it to potentially build. That's flushed out that support. I would have expected, instead of this sort of consolidation and move up to retest 122.62, I would have expected a lower high and then it roll over and continue down to our, was it 120.16 mark? So looking at it yesterday, I thought anyone that's got a long, just put your stops here. You're locking in a good little trade, handy if you haven't taken a partial along the way. And then, of course, last night with the rate rises, bang, the pounds popped up. So you'll find that it'll probably squeeze out some of these shorts that are built up in here. So I think that trade's pretty much done, especially when you get this flush. We said it before, flush and run, or wash and run. So they tend to wash out. It's going this way. You know, the shorts are in force here. It's popped out, so it's flushed out. That that would have stopped in a few sellers going, okay, we'll stop it in here. We'll put our stops up here, longer term. Flushed him into a trade, and then just run them back out. So it's chased them back out. Probably just going to squeeze these guys out initially and probably squeeze some out here. So I think we've got a few levels on the upside now, but we'll just keep an eye on that for future trades anyway. But that's playing out well, and it did play out well. Euro, another one we're expecting that pullback, especially after that pop up through 106.78 resistance zone. And that was, you know, building high lows, pushing up, washing out some of these minor inside levels here. And that was a key level at, was it 106.78, you can see. Popping up through, so we're expecting that to be a high low. We just wanted some contraction back into the zone, and just watch out if you're trading FX. It does it time and time again. It'll pop up through a you know, a key level, and then it'll just catch all those traders buying, and if they got tight stops, they get flushed back out of the market, and then you want to look for those high lows. It's not uncommon, but it's more rare that it's just going to power on through and straight up to another key level. It's going to pretty much, you know, especially when you come from such a low level, if you pop up through, you know, you retest it, pull back and build that high low, then you expect it to go. But it, you know, if it's coming from such a low level, so 105.30, that leg up, and it breaks through a zone, it's a good sign just to start looking for a shoulder trade, you know, major longer term shoulder trade, which played out beautiful. And that was again on the euro. That was because of the US dollar. So you can see it just spiked up there. But that would have been, you know, an ideal little entry if you go, you know, just trading on basically through that high, I guess. You've got your high low that built. Don't know if that's an English word, but anyway, I know what I'm saying. Hope you guys can understand. But you can see it's just broken through that high. Would have been a, you know, potentially a nice entry there. You can place your stop just below this low at 106, probably 106 even would have been nice. Keep it out of the way. A break through that, what was it, 106.40. 40 points risk there, but as it played out, what are we? You've got 100 pips up there. Well, thereabouts anyway. You've got about nearly 100 pips up the sleeve, so nothing wrong with that. You can place your stops. You know, you can tighten it up. Just see how you go. Go down to the lower time frame, but that's played out beautiful. Again, that was based around we're expecting. I guess there wasn't shorts built up in this one. It was just more the longer term price structure looked good anyway. You can see it's pulled. You know, major level there, it washed out that major level. Then once it's gone all the way through, that's a flush out of a major level, probably on a daily basis. Gone back up to retest the major, you know, the high up here. And then it's pulled back, couldn't get through that zone again. So if that was a strong, weak market, should have, you know, toppled over. It's built a major high low, and that price structure is just beautiful on the hourly anyway. So that's one to keep an eye on. That's about it, I think. The Aussie. You know, we're expecting this to go up, but we really didn't see anything in the way of setups at that stage. Expecting a deeper correction there, but that would have been a blinder if you were trading that. We're looking at the whole 7,500. I don't know if we sent an alert, but we were talking about this. Oh no, it's in a video. What I'm going to start doing through TradeSetup and Trade Direct, we're going to start just posting a weekly FX review. It's going to be more of a video just showing you what we're looking at anyway. So we talk about it a lot in the streams, but if I don't, just keep an eye on those if you want. We'll start looking at some different currency pairs. All right. That's it. Let's just whip it over to what I'm going to look at now. Any questions on those currencies that we're just looking at then? Market's up only 9 at the moment. Just telling my little girl she's playing out there. She's kicking up a fuss out there. Alrighty. Now, what I want to look at, firstly, there's just two things. So, well, let's start it off by, not BWX, what was the stock? Oh, I've already forgotten. Memories of Civ. What was it? API. It's probably this one here. MVF. Yep, MVF. Let's just look at that. So the question, what we're looking at before, and what I was just touching on before, it goes down to the question we got from someone, and I know probably listened to this later on. He's at work at the moment, so sorry to hear that, mate. But anyway, the question was, we had an alert on this through 191, which ticked off yesterday, and it pushed through, you know, the most recent high. So that's confirmed a higher low here, and you'd expect continuation. Now, what happened today? It finished strong yesterday into the close. What happened today? It's opened low and really tried to wash out that low. It probably did by about a cent. I think we had a 182 stop, and it was a 183 high low. So we're held in there by 1 cent. Now that the question was, if, you know, a lot of the times he's seeing these alerts, and he's been following it for a while now, which is great, and he asks questions, which I really appreciate. One, because it helps, you know, keeps me on track, and two, it helps me or helps you with your trading and understand what we're looking at and why. So the question was, why not, you know, if it's going to pop up and pull back, why wouldn't you just sit there and buy at a better price? What it is, and what you probably would have guessed, it comes down to price structure. We've got, you know, we've got confidence in what I guess you've got to have confidence. So what it would be if you sit there and that's your theory there, okay, sometimes it's going to work, but what's going to happen and what you don't want to happen is to get those runners, because there's a reason why you're getting into it. You're getting into the trade, and that's because of the price action. And what you really hate to miss is those runners, is when you get it right. Say, for instance, if you're looking for a breakout through, just say at this stage, it's probably not the best example, a breakout through that high, or even a breakthrough here. What's that? 190. You're looking at it there and say, okay, if it breaks through there, I'll just wait till it pulls back and buy it. And then you missed out on this leg here. That's the last thing we want. Okay, so you don't. The reason why you want to, you know, we've got my particular style of setup is wait till it gets through a key lower high. Potentially it was this little lower high here, if you can see. We'll make that a bit bigger. It was this lower high at 190. If it pushed up through 191, I'm front running pretty much a break of these little highs at 192.5, and in hindsight it did. We expected that, and we were expecting that because it's enough of price action over the last few days, pretty much this month. It's holding below 190, but it's also holding what we potentially saw as a higher low through 182.5, 183. So that's the reason why we bought it, and that's the price action. Now, if we bought it through there and it pulls back and stops us out, so be it. We got the price action wrong. But what we're looking at there, what the last thing you want to do is wait for it to pull back. You do have the price action completely right. Wait for it to pull back and it doesn't, and it goes on with it. This is going to guarantee, by just trading it this way, when the break, you know, push up, when it's, you know, the momentum's higher, momentum's going up, you're not going to miss out on anything. And if it does pull back and you can get a better price, so be it. But the thing is, if it does flush you out, that's going to happen occasionally too. But what you don't want is to, you don't want to miss out on those runners, I guess is what I'm trying to say. So we're guaranteed by trading it this way and trading it this style. If we're wrong and if it does stop us out, then we could get a better price, so bet it happens. And that's the way it goes. We've got it wrong in essence. But if we can buy it on a breakthrough here, we know with confirmation that's a higher low. We know where to place our stop. We know where to place our risk. And then just what our expectations are, that's going to trade up to 210 and on. So that's pretty much the reason why I don't like to, you know, muck around. If we see price action that's showing us, you know, favourable conditions or probability that the market's going to kick on higher, we don't want to muck around trying to get better prices or trying to refine it, because there will be a lot of times when you miss out. There's going to be times when you get a better price, but then, you know, my theory is too, if it's going to break and it's going to be strong, which I generally expect when I see this sort of move back, consolidation, not particularly on this trade, but it's more when the market's going up. So I'm looking this to go on this particular trade. You know, it's contracting lower. I'm looking for it to go from contraction into expansion. It's probably not the best trade because it hasn't really broken any key highs, and I'll probably front run them. But if you've got the markets going up and it's pulling back and you've got the higher low and you're looking for it to pop out, you don't really want to miss it on that, because if it's proven a higher low, it's proven that buyers are stepping in. And if you tend to wait for that a refined entry, there's times when it's just going to go on without you, sorry. And that's going to kill you. It's going to kill your bottom line more than anything, because there's going to be times if also, you know, if it pulls back and you wait for the better entry, it's going to straight through and stop you out anyway. I guess it does the only benefit of doing it that way, the times you do get stopped out, it's going to be a little bit smaller. But I guess if you nut out the numbers, that's not going to help you. You know, you're missing out on those big paydays. So does that make sense here? I guess, and that's the reasoning why you just want to. We're trying to buy from contraction into expansion, and we want to be buying when we've proven that from a higher low that buyers are starting to step into the market and building. All right, what was the other thing? Now, I just want to show you something. For fairness, a dumb trade that we did, and it was probably a bit stupid in hindsight, and I'll just explain why. Now, EDE, if I can grab up the actual trade. And why, in hindsight, it didn't turn out well. Now, this is the alert we sent out. All right. Now, there's and what we've talked about a lot in the past. There was one fundamental thing wrong with what I like to see. And when I took this trade, or when I put it out as an alert, you know, looking for it to break, and I'm really just front running again a breakout through that 26.5 level. Now, especially, so what happened? It actually traded up through there, and about 3 or 4 days later, that was pretty much the high. Once it got me in, pretty much retraced, and then eventually it was holding that stop level that was about 21.5 cents. It was holding that for a while, and then spiked through, and then took off. So the reasoning behind this, I was really front running. It goes against pretty much what I look for. You know, you got contraction. We haven't got confirmation it's broken out of contraction, so that was a key point that I missed on this one. But in fairness, I just thought I'd show you this and the reasoning why it failed. It eventually worked out. It held contraction, but I was a little bit too early and missed a prime entry. So yeah, with this one, so looking for it, it broke through there, which we got, and I was trying to front run a break of 26.5. and a breakout of contraction and pushing up through 27.5 and so on up to 34. As it played out, and that was in this mark here, you can see I was front run that, got in at 20, what was it, 24 I think it was? 24.5. In at 24.5 here, pretty much it was a high. And then it retraced on us, stopped us out here, and then you can see it started holding the high lows. So you can see if we probably drew a line through there, you'd find at this point it was starting to, you know, there's really, you got a lot more evidence on your side. It was holding high lows, and you're looking for this little, that would have probably been a prime entry through here, a breakthrough, which had probably gapped up just on the open. It gapped up, probably would have got you on that break here at 25.5, and then you saw it accelerate higher. So we're still expecting EDE, you know, it's actually looking not too bad. I probably expect a bit of contraction in here. On a daily basis, maybe just to retest these low, or something like this, higher lows, lower highs, just in here, and then a break back up, and you know, get a sort of more of a powerful move up on a weekly basis once the stochastic. So enough of a correction, and then off we go. But I just thought I'd show you that one. You know, when you start to break your rules a bit, start to second guess yourself whether it's cockiness. You know, we're doing all right at that stage, and you get it right, you know, your premise is right, the market did hold, it was holding high lows and went, but you get stopped out. So probably it was, you know, a bit of bad placement too, but stop placement, but that's the way it goes. So in essence, what it is really just waiting to see if you can get that break up, show you it's breaking out of contraction, and then look for high low. All right, any questions on that one? What we'll do, if there's none, we'll go through and have a look at, Paul was asking about, just knock my phone, oh, there we go. Got my water in the background there. Paul was asking about CBA. What do you think CBA can get to a 100? I'll show you the longer term price structure. It's getting a bit, just on a daily basis, this is a great little, we call it the cup and handle. So it's had a nice projection up, and it's come off this base around 70, and just to go through, well, probably you can see it on the weekly anyway. The weekly it's better. You can see that contraction lower, but buyers were just constantly stepping at 70 bucks. Then you got this little flush through 70 there, which generally when you see that, it tends to lead, especially when you see such a good level. And then if it bounces back, which you can see on the daily, when it bounced back down, we've got a retest, and this failed to go lower, you know, through this recent low. Where was that? About 69.22. So it failed to take it out, and then you get this strong, and then it just produced a strong leg higher. So I really like that price action. At this stage, you still had a bit of, a few of these lower highs to contend with through about 78. But Paul was saying, why are you expecting it to, potentially go up towards 100? Well, probably 100. 100 is really, it's got to get through this high. But I think if it did, with this type of price structure, you can see it's spent most of 2016 just banging around between 70 and 80 bucks, and then it's projected out through $80. And then the most recent price action we're getting is that cup and handles. What we see it's just popped up through that most recent lower high, and about 86. It did it just here, but then it's obviously, I think the dividend is dividend is announced there, but it's still holding higher lows, and that's nice. It's getting a bit extended at the moment, so probably what you'd expect is a bit of contraction, but I still want to see it hold higher lows, and I think that will take us up and through 86 bucks, and that's going to potentially produce another leg up, through these other lower highs here. It's about 88, 89, I think. What's that? 88.50, say. I think it's going to take us up through there. So it's a nice price action when you get this projection off the low, and you've got a lot of work done through here. So there's a lot of selling, but it's been absorbed around that 70 mark, and it was a good part of a year. So it's just getting absorbed, lower highs, still absorbed, and it's just busted through these lower highs. Really nice price action. So if you're looking at it here and you've got that nice strong leg up, and people go, okay, I want a nice deep correction, and then I want to see it hold a higher low and then go. It's not doing that. It's holding up, and that's what we say now. This cup and handle type of price action, when it's had a nice strong leg up, it doesn't pull back like people expect, and you might find that people are going to start chasing. If it starts, holding a higher low and building through 86, you might get people starting to chase it because they don't want to miss out. When they might have expected it, at least down to 79, 78, nice deeper correction to get into, and then build a position from there. So yeah, I think that, with the amount of time it's spent here and absorbing those selling and that projection up, I think this type of price action could take us up and through. I think it will take us up and through 95, but we'll just have to see how it plays out. Obviously, could be wrong, but I think the stochastics on the, there is selling coming in, but you can see by the stochastics it's getting absorbed. Whether that's going to continue lower on the weekly, and go to oversold territory 20, sometimes it just doesn't. You can see this type of price action, it gets absorbed and pops back up. So you might see it just grind higher like that over the next, through 2017. We'll see how that goes anyway, but that price action is really nice. Probably here it did the same thing, extended leg up, bit of consolidation, bit of contraction lower, and it started, on the tail end of that move, that contraction, you got high lows starting to build. And then all you're really looking for, potentially we were looking for high lows here, but we didn't get that breakthrough. So if you're sitting on the bid here, you had to take a bit of heat with this move down. Does that make sense, guys? I just wanted to point that out, I guess. So when you're always looking for high lows to build out of contraction, and then you want to see a breakthrough, these most recent highs, say, well, I don't even know, that's around just above 50 bucks. Once it breaks through there with this push up, then you're starting to look for an entry. All right, and potentially we're getting that now. You could, I think, enter it through 85.5. The only thing that I get a bit is extension at the highs here, but it doesn't mean anything when you look at that. Back towards at the end of 2016, that move up, it can be extended to the highs, it can be overbought, whatever you want to say, and it can still put on a couple of bucks. So we'll just see how that plays out. I hope that answers your question there, Paul. Okay, now Clement, you've got Beach. Let's take a look at that. I think it's actually good, and I know. So, just looking at the weekly. If you look at the weekly, all right, what we don't know is going to happen, and this is just something to be aware. And you just got to take into account when you're trading. So I know it's off the weekly, so there's a lot of opportunity on the daily. The weekly's overextended here, so we were looking at this purely because it's a prime area, which it could project, and it could just continue on. It's pushed up off the lows around 40, pulled back, made a high low here, taken out this most recent lower high at 80, pulled back again. It's in a prime position on the weekly. It's overextended to the downside compared to this low. So everything's starting to stack up. Now, we don't know if this is just contraction, because on the weekly, your key level is at 120. I know that's miles away, but this could potentially build a lower high, you know, between 80 and 85, and then roll over and retest somewhere down towards these lows. We don't know. Okay, so you just got to be wary. We've got leg down, contraction up, leg down, and it's, I guess, on a much bigger scale, it's something like this. You know, lower, high, low. You know, take out some of the most recent highs, builds a lower high in here, and then that produced a leg down. I'm not saying that's going to happen, but it's just something to take into account when you're trading it off a daily basis, just to know where you are on the weekly. Now, if we get down to the weekly, just remembering that we're in a prime position on the sorry, this is a daily prime position on the weekly, and then we're just starting to break up through those highs at say 72.5. Now, partials, I'd probably, for me on this one, see you later, Paul. Thanks for joining us, mate. We'll speak to you later anyway. And where was I? So we're knowing this is a nice little zone on the weekly basis. We don't really, you know, if it starts getting extended but it's not kicking on with it, then there is a chance that it's going to be a lower high on the weekly. Does that make sense? So just keeping that in the back of your mind, whether this is contracting and then we sort of busted through 90. We know that this is going to drag in some buyers here. I mean, you're taking a good opportunity. It's low risk because you know where your risk is going to be, say below 67.5, below 67. Because if it goes through there, then it's breaking through those support zone, and you're potentially going to get that extension to the downside on the weekly as well. And the weekly still, I mean, it is coming from overextend, but there's no reason why this could push back up, wash out those lows and then go, or just contract a bit lower. So for partials, you're in at 74, where are we? 75, 76. Obviously, it's probably a bit too early, but there's minor levels through here. I don't think you need to worry about those too much. You know, you'd probably be looking up towards 80, because if it's not going to work out, it may be starting to crack. It may just pop back up, and then that's going to drag it in because people are expecting, okay, this is looking good, and then it builds that lower high. That's the only thing I'd be concerned about on this trade, is that it's going to end up being a lower high on the weekly. If I'm wrong, it doesn't matter because it's going to break up through 90. But if it's going to do that, you'd want to see some strength come into the market. You can see how it's pushed up here, and there's a couple of strong days. You've got a gap up here. You want to see that type of buying into the market, which could happen. It might happen over the next few days, but just keeping an eye on that. If that happens, then there's a good chance this is, and that's going to take us up. You want to see it take us up towards that 90, you know, maybe that 87, which is going to be a key level, 87.5, because that's what's had that pullback. It's grinded its way higher, and then that started accelerating to the downside. So that's going to be a key level around 87.5. Potentially, there's going to be one, you know, that break through those lows around 81, but that's not a very good level, to be honest. It's not a serious level. It's not really showing anything too much. So I would just try to drag up my, you know, stops. If you get that opportunity on the daily basis, if it starts extending higher, you can see by the moves like this type of price action, potentially I'd want to be taking something off around the 87.5. It's going to lock in some good little gains for you. But again, we just have to see what happens on the next few days. Because like I said, it could be exactly this type of price range. You can see that. Similar type of stuff. You know, the MAs are down here, and that just projected straight up. You want to see that. If you don't see that and you get more grinding price action, I guess I'll show you the difference, what I'm trying to talk about. I hope this is making sense, Clement. I'm guessing it does. So it's a difference price action, really, that you want to see. Now, the difference in pricing, this went straight up. There's no, really on a daily basis, there's no high lows, lower highs. There's nothing projecting out on a daily basis. It just basically, day after day, it was quite strong. That's what you want to see into potentially 87.5 or even up towards the 92 mark. That's what we want to see. What we don't want to see is this type of price action grinding its way higher. If it does that, that's not conviction buying to me. That's more opportunist buying. It could be completely wrong, but you can see on the downside, you can see when things move. Just look at the change in the price action. You know, when it's not looking good, Yeah, we can see that. The market just goes straight down. This doesn't really, it accelerates down. You get this little correction back up. It starts accelerating down again. All right, but then the difference to this type of price action when it's just dunk, 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 it's this in reverse. You can see it's popping back up, back down. You're getting this type of price action. That's where the market is, any selling starting to get bought up. I know there's lower lows, but it's getting bought up. It's getting soaked up. So any break through the lows is not strong here. Here, not strong. And again, we got that higher low. Unlike this type of price action, is really just bang. It just went straight down. Does that make sense in the difference? So if we see this type of price action on the way up, ideally we don't want to see that. And that for me might lead to a major lower high on the weekly basis, especially if you're starting to project up into, you're starting to get a bit overbought. But if we see this price action, up to potentially 87.5, or even if it blasts through that and hits up to 92.5, then great. I'd probably take a partial up there and see if I can, see if you get something like this, and that's going to take us for another leg higher. And just try to give the second half a bit of a run, because you're going to have, if this is a similar type of trade, you got the breakout here, you got that projection up, taking a partial up here. That's great. Then you've got a bit of reaction off a major level. That's great. On the second half, you can just widen that stop just to give it a bit of room. You're not going to lose on it, because if it comes all the way back down here, ideally you don't want that to happen. And it didn't. It started getting held. It was holding up at that stage. The MAs was quite strong on the way up. And then you're just looking for, again, just rinse and repeat. We see those little anchors broken. You got a little anchor on the downside that starts to get broken here in this price action. So okay, we can project this leg up, and we're starting to look up towards that zone 92. And then maybe taking your second half off, or just trying to tighten it up, just trying to squeeze out as much as you can. So at this stage, you're going to pull back here. We don't know if it's going to build that lower high. You maybe just put your stop under here, and okay, then you got stopped out. But at least you've locked in. You've given it a go. You're having a go to see if it can just continue on with it. All right. Anything else, guys? Anything else you want to just pop up there and just see? So I hope that makes sense, guys. I tend to repeat myself, but we just want to, just want to take note of that price action, because you don't want to cut it off. It could just be the exact same thing happen as what's happening here, or it could make that lower high and roll over. We don't know. If it's going to make a lower high, then you've got at least a chance just to tighten up your stops, because if you get this type of price action, all right, you can probably anticipate what's going to happen. You never know. But it also gives you a chance probably to tighten up your stops and make a break-even trade, a slight profit, without just exiting for no reason. What else you got for me, Clement? Anything else there? But ideally, that's not a bad spot either way. Just remember, if it's completely wrong, that weekly, if that projects into sort of overbought, I'd expect that to go bang straight up. So you're giving yourself every chance to take a great trade. Alrighty. MVF is starting to pop back up. Maybe just a bit of a flush out. We'll see how we go. Alright, what else we got, guys? I'll see if I can just pick out anything else we've been looking at. GXL. Now, okay, well, let's go through this one. I don't know if we just mentioned it a second ago. I just want to go through what's the theory. It's probably more off the weekly. You look at that weekly, I mean, it's pretty clear. Oh, well, I hope it's clear after all these sessions we've done. I hope it's pretty clear now why we're looking at this trade. Let's just go over it. And if you're trading it, you can trade this off the daily or the weekly. The only reason I like looking at the weekly structure is because you can see what kind of, if it's going to go, what you could expect to happen and why. And then going down to the daily just to refine those entries. And it's really just to make sure, by using it, if you're trading off the weekly and using the daily for entries, it just refines your risk. You can minimize your risk, and that's just going to improve your stats longer term. And that's what it's all about. So the reason for this, you can see the markets, push low, pop back up, lower high, extended all the way down to that 5, it popped back up, and then you've got, this type of price action. It's gone back down. Now, if that was weak, you'd expect this not to happen, really. You would have expected that just to gone on with it and gone a bit lower. you know, like we talk about the volatility projections. So that's one leg down. That's your next leg down, which is quite strong in comparison to the first leg down. So if we expected, if it was weak, you'd probably expect that type of thing from here to project down to somewhere around 375. It didn't. It was just really flushing out those that support zone at 5. And then what happened from here? It took out the high. So that price action is starting to look really good. And you can just, if we just draw it up a bit clearer, what's also happened, it's broken out. So you've got one, it's broken above the most recent lower high at this stage here. Still doesn't mean it's breaking out of contraction just yet. What it could do is just, you know, pop up and flush it out the other side of the market, still hold that contraction lower, and then could start working its way back down again and project all the way down through 5. So at that stage, we don't know. What's happened on a weekly basis, you've got just here. And that's a key little point, which I, when I was talking about EDE before, which I wasn't waiting for, you know, getting cockiness, thinking I'm good, the ego getting the better of me. That's what I didn't get. So that, for me, if you can just see, that's a nice little confirmation that this downtrend's starting to crack. It's showing signs of cracking. And then we got that sell-off, you know, it's starting to push back down again. But then you're getting these hold-up of around that $6, and we're potentially getting the same price action of what we got here. A flush of the lows we've got just here. So for me, as you can see, the price is contracting in. It's holding some higher lows just here at about 650, probably the recent one, on a weekly basis. But the key level really is around that. I think we've got it around 722, 23. That mark on the daily basis. So we're getting confirmation that buyers are stepping into the market. You know, it's pushed down here. It's flushed out this little level at down to 6. Most recent lows. It's not a key level as such, but it was a level where people might say, oh, this is starting to roll over again. We'll sell, sell, sell. Got them selling. And what it's done is put people on the sidelines, which what we need is fuel to step back in and buy it and to move that price higher. And then we've got it again. Again, you're getting those same people where they're getting impatient. They're not looking at the price structure correctly, I'd say. With this little flush of 650, we'll go down to the daily, actually. It might help out. I just want to take that back a bit. Yep, all right. All right, so we've got, it's probably the high there, I think. So we've got something like that. That's your little break out of the top. So, okay, heads up, something's happening here. That's the flush, you know, you can see down, and then it's, I don't know what's happened there. It's just gapped back up, something good's happened. That's flushed out that $5 mark, and then we saw it really did, if you can see that through here. Flushed out the low, only a minor level, and then we're just doing it again here. So that's probably just below 650, say 6, is it 5? 6. Just below 650, we've just done it again. So that, if you take it into what's happened in the past, it's led to a bit of a rally. This could potentially lead to a bit of a rally. So we've got a level up here we just really want to get through. And I probably said 722, so I can see that heads up on the weekly basis, we're starting to hold some high lows. So I think there's going to be some strength coming into it. We've got a stochastics are in a nice little position on the daily. So if this breaks up through that 7, I think we've got an entry of 722 potentially. Let me just see. GXL. No. So we haven't got an entry level on it, but I'm just looking for that. You know, I just want to see it pop up through that 720 or 22 mark. So if I see it trade 722, we're starting to, this is confirmation, this is another little minor high low that potentially we could work off. Even then, you might not be so bad, a bit of a break on there. You've got your risk below, you know, probably about 675. But you can just understand, there's people understanding what I'm talking about with the price structure there and adding it all together and building that picture. All right, holding higher lows, and it's flushing out the lows. It's just washing it out. And what it's doing, just remembering, it's putting buyers who potentially bought it through here and getting impatient, nothing's happening, flushing them out. But they're not taking a read on this longer term structure. It's probably got to go back a step to the weekly structure, the weekly price action, just to see what could be playing out. But I think this could lead if we get that. If we get that pop up through. I'd love to see a nice little high low and then get buy on a break up through. Just a bit of extra confirmation that's starting to take out those, and just see if we can start getting some acceleration higher. So I think that's going to start leading to some nice. It's spent a lot of time just bouncing through pretty much 2016, holding up above. It's probably about 515 to 20. This support zone through here, it's spent a good part of a year holding up above that. So it's done a lot of work. A lot of buys have been stacking up. They're probably getting flushed out a bit, but I think that's enough that it's really going to produce a nice strong leg higher. But we'll see how it goes. Alrighty. Is there anything else you want to have a quick look at? I hope that made sense, but that's what we're looking at on GXL. I think it looks good. Now, if I'm wrong and it rolls over from here, alright, tough. We'll have to just go and look at something else. But either way, I'm seeing it starting to look good, and just today it's starting to show a bit of promise, rejecting those lows, some rejection candle here, potentially a high on a very minor scale, I know, potentially a rejection here, pop up through say 705. If you've been very risky, if you've been very aggressive on the trading, a 705 buy with a stop just about 680 could lead, you could be front running that break of 720, which in essence really starting to refine your entry just there. All right, CKF is bloody yo-yo today. Look at that. I think that's getting played a bit at the moment. You can see it's just choppy a bit at the moment. I don't like that too much. We'll see how it goes, but that price structure, it is looking good. Just going to the weekly, it looks great on the weekly. That pullback, contraction lower, starting to show signs of really pushing up strong. Just have to see how it goes. All right. If we've got no more questions, nothing else we want to have a look at, then we might call it a day there, guys. I hope that was helpful. I'm just listening to my daughter in the background there. Yeah, I hope you got something out of that. And just to see, it's good just going through different price action of what's happening on the. It's not a common rule for everything, but it's some little tips and tricks when you're talking about washing out the lows, putting traders on the sidelines for fuel to jump back in the market. They might revenge trade. You don't know what they're going to do, whether they really like it, whether they actually get out or not. We don't know. But what it does, all those little bits and pieces that we discuss day in, day out, it's just little helpful things. Sometimes you can look at the history of a chart, of the price action of the actual stock. Sometimes it's nice and clean and it's a lot easier to read. Sometimes you might just have to look, okay, I'm expecting this nice, it's down near a support zone. It's got a history of flushing it out and going, especially when the trend is higher. It gets down to support, flush them out and then pop straight back up. FX does it quite, does it often. What do we call it? Rinse and run, or flush and run. So it tends to wash out a few levels and then go. If people are expecting it to go high, they might get flushed into a trade. The trend is up, like we just showed on that. I think it's the yen, the Aussie yen. Pop back up, has a good deep correction, and then it flushes them all back out, puts them back on the sideline. They're ready and raring to go again, and then pull them back into on the upside. So just those little things is really helpful, I think, to look at when you're trading. Like I said, I hope you enjoyed that, guys. We'll be back in on Monday, same time at 12:30. So if you've got anything you want to have a look at, just we'll whack it into the chat there. Or if there's some charts that you want to, some trades that you've done, it probably not, if there's something you want to chat about, like we get Paul jumping in there, yeah, feel free to send it through on some. I know Clement's doing really well. He's chucking in. He's happy to put some trades that he's got online. Put them online, sorry, and then it's good just talking about it to see what's going on, see how we're going, and even some bad trades. If you can't completely understand why it didn't quite work out, like I was chatting about EDE, I know why that didn't work out, but it's just good to just pop up there, and just to talk about it and see why it didn't work. I mean, it can't hurt, can only help. So, all right, guys, I'll call it a day there. We'll speak to you again on Monday. Cheers, guys. Thanks for joining me. Bye.